Hey everyone! Today we're diving into a fascinating topic: financial scandals and corporate governance. To make things really interesting, we'll look at a real-life example from India that shook the corporate world. Get ready for a story that's full of twists and turns. We'll break down the accounting stuff in a way that's easy to grasp. Let's jump in. Imagine it's 2009 and we're in India. There's a company called Satyam Computers, and it's a big deal in the IT world. They were like the superhero of Indian tech companies, making waves globally. But guess what? Behind the scenes, something very shady was happening. This is the story of how a big financial scandal unraveled at Satyam and what we can learn from it. Satyam Computers was founded by Ramalinga Raju. For years, the company was a star performer in the stock market. It was doing well, and everyone believed it was one of the most successful IT companies in India. Investors, employees, and clients were all singing praises about Satyam. But in January 2009, Ramalinga Raju made a shocking confession. He admitted that the company's financial statements were fake. What does that mean? Let's break it down. Imagine you're playing a video game, and you're really good at it. But what if you started cheating to make your scores look even better? That's sort of what Satyam did, but in the world of finance. They manipulated their accounts to show that they were doing better than they actually were. Here's how they did it. Fake revenues. They inflated their revenues. This means they reported more income than they actually received. Think of it like claiming you sold 1,000 products when you only sold 500. Fake assets. They showed higher asset values on their balance sheet. Assets are like the company's possessions, such as equipment and buildings. Satyam claimed they had more valuable assets than they actually did. Fake cash balances. They also falsified their bank balances. They showed that they had more money in the bank than they really did. In accounting terms, this was like using a fake calculator to show that the company's financial health was great, when, in reality, it was a mess. This was a serious breach of corporate governance, the rules and practices that should ensure a company operates honestly and transparently. When the truth came out, it was like a bombshell. The stock market crashed, investors lost a lot of money, and many employees were left in shock. Ramalinga Raju and several other top executives were arrested, and Satyam's reputation was severely damaged. But here's where the story takes a positive turn. The Satyam scandal highlighted the need for transparency in financial reporting. Companies must provide accurate and truthful information about their finances. Strong corporate governance is crucial. This means having proper checks and balances, like independent board members who can oversee and challenge management decisions. Companies need effective internal controls to prevent and detect fraud. This includes regular audits and thorough checks on financial practices. Strong regulatory bodies can help ensure that companies adhere to laws and standards. After the Satyam scandal, India introduced stricter regulations to improve corporate governance. After the scandal, Satyam went through a major restructuring. The company was eventually acquired by Tech Mahindra, and the new leadership worked hard to restore its reputation. It wasn't an easy road, but it showed how a company can recover from a disaster with the right steps. So there you have it, a deep dive into the Satyam scandal and what we can learn from it. Financial scandals can be tough, but they also teach us valuable lessons about honesty, transparency, and the importance of good governance. Remember, just like in the story of Satyam, having solid accounting practices and strong corporate governance is crucial for any successful and ethical company. Stay sharp and keep learning. Thanks for joining me on this financial adventure. If you found this story engaging, hit that like button and subscribe for more intriguing tales and lessons from the world of business. See you next time.